You didn't know? Well, here we go. Like and subscribe. So you want to know about Forex, the Forex market. What is the Forex market? Can I make money in the Forex market? Can I make money and stay home and have that as my job and be a Forex and make that a career? Well, you can. You definitely can. The Forex market is the largest market in the world. And it's the foreign exchange. It's the exchange between currencies. So it would be the difference in value between, let's say, the euro and the United States dollar. So the difference in currencies, if you were going to go to Europe on vacation and you needed to change your dollars into euros, that's what the foreign exchange is. So you would be able to change your dollars, what the exchange rate is, into the amount of euros that it's valued at, and so you would be able to conduct business in Europe. And the big companies do this on large scales, and it happens all day long, every day, 24 hours a day, 5.5 days a week. You can trade Forex at 2 in the morning on a Monday night, or 2 in the morning on a Monday morning, whatever your preference is. But you can trade Forex 24 hours a day, 5.5 days a week. Now they close on Saturdays and Sundays. They close on Friday afternoons and open up Sunday afternoons. So, I mean, and 2 o'clock in the morning, you got your London office opening up thereabouts, and earlier than that, you got your Eastern offices opening up, and about 9:30 or so, you got your New York offices opening up. And when those markets overlap, there's a lot of activity, a lot of volume, a lot of trading going on, and people can make some money. So, what else is it? So, Forex market, you're investing money. Now, there's something very powerful about the Forex market that the other markets really are lacking is leverage. Now, leverage is like 20 to 1, let's say you have a 20 to 1 leverage. It means for every dollar you can invest $20. So your brokerage company will lend you the money, will front you up the money. So for every dollar you have in your account, they'll give you $20. So it's very powerful. If you got $100, it's amazing how fast you can compound your money when you're actually investing with more money than you have in your account, and it rolls over. It's very powerful. And a lot of people, that makes them scared, because by the same token that you can earn a lot of money, that they're afraid that you can lose a lot of money. And you can lose a lot of money if you don't know what you're doing. If you're in there and you don't know what you're doing, and you're just the market goes the wrong way, and you lose your money. But there is safeties in place, and if you know how to trade, there is something called a stop loss and something called a trailing stop loss that will keep you from losing your money. So let's say it's a percentage. Now, to make it more understood, you make money, it's called pips. So broken down, the currency is broken down to the 4th decimal point. Okay, so normally you have a dollars and cents of 1 point, let's say 01 for $1. This goes 1.0101. So it could go 5 decimal places, but the 4th decimal place is what they use to calculate your money, and it's called a pip. When it goes up and down, it's a pip. So so the pips are how they calculate your money wins and losses. So how you stop yourself from losing all your money is you say, well, I can afford to lose 2 pips. So I want to lose 2 pips, no more, no less. So you put a stop loss in at the 2 pip level, and as soon as the price drops 2 pips, it automatically sells. So the most you would lose is those 2 pips. So the risk reward ratio is, let's say you want to risk $1 to make $2. So if you're going to risk $1 and you make $2, then it comes to understand that by chance, if you're only 60-40% winning, if you're only winning 60% of the time and losing 40% of the time, and your risk reward is 2 to 1, well, then you're making money. So you don't have to be good in the Forex market. That's the really amazing thing. So you don't have to be good. You could lose 40% of the time. 4 out of 10 times you can lose. You really can lose 5 out of 10 times and still be breaking even, right? So 5 times out of 10 you break even. Well, 4 times out of 10 you're making money if you only lose 4 times out of 10. Now, on top of that, you've got leverage. So you're leveraging other people's money. You're leveraging other people's money. This is just a no-brainer. You can really make money now. There are trends, and the market goes up and down just like any other market, and the charts, and you see it go up and down, up and down. Sometimes it goes straight across. Sometimes it'll be an uptrend. Sometimes it'll be a downtrend. But Can you make money on an uptrend? Yes, most people would say that that's how you make your money on an uptrend. You can also make your money on a downtrend, because in the Forex market you can sell. So when something is, you can bet against something. So if you think something is going to go down in value, you can sell it and make money while it's going down. You don't always make money while it's going up. So if you're somebody that nothing ever works for you, and you think everything you touch goes the other way, well, now you can trade the Forex market and take that skill that you have, that you're always wrong and you're always failing, and bet on the failures. Find the failures and bet on them, and you can make some money. Invest in them and make some money. I keep saying betting. A lot of people call it gambling, and it does have a big feel of gambling, but it's speculation. You watch the markets, you see it happening, you watch the trends. What happens is, if you watch in the market, and then the charts, there's all different charts. There's daily charts, there's weekly charts, there's monthly charts, down to the 15-minute, down to the 5-minute, down to the 1-minute chart. Now, if you're trading, day trading, and you're trading between the 1 and the 15-minute chart, you look at the daily chart, you see what the trend is. Now, if the daily chart says the trend is going up, well, then in the smaller time frames, in the 15-minute, 1-minute time frames, you can bet that it's going to go up, because all day it's been going up, all day yesterday it's been going up. So on the short-term periods, it's going to go up. So that's how you're almost guaranteed that it's going to go up. Even if it drops a little, it's going to keep going up. So it goes up and down. But in the meantime, while it's going up and down, it's got higher highs and lower lows, higher highs and lower lows. So it just keeps going up. And that's the trend. So you follow the trend on the daily chart, but you trade it on the minute, 15-minute, knowing that which way it's going. So it's speculation. It's not gambling. Okay. Now you compound that with the leverage. Now you're talking about making some money. Now you really can make a lot of money. There are strategies out there. There's gurus that'll teach you different strategies and systems and ways to follow the market and everything. And the truth is, they're all the same. They're not all the same, but they all work the same, to the fact where some of them are going to win and then lose. They all win and lose. None of them are going to win all the time. Okay, so they're all going to win and lose. The trick is to stick to one. Find one that you feel comfortable and you can understand, and just use that one, and don't change, because every time you change, you're throwing off the law of averages. So you stick to one system, and you keep going with it. Okay, and unless after a month or two you realize that I'm only breaking even with this strategy, I'm going to try something different. But then you totally abandon that and go to the new one and try that one for a month or two, until you find what's working for you. Things work for different people for different reasons, and depending on what chart you're on, and what your daily attention span is to actually watching the market. Okay. So the Forex market is a powerful market, and where else can you just wake up in the middle of the night and make money? Really, it's something else. You got long-term trades, you got day trades, you got swing trades. Day trades are in and out in a day, sometimes in a couple of minutes, sometimes in an hour. You got long-term trades where that a country's economy is going to be going up, so you invest now knowing that in 6 months or a year it's going to go up. And a long-term trade, that's all fine and good. And you got swing trading, that's a couple of days here and there. You're watching the swing of things, and it's going to go up and down. So talked about stop loss, buy and sell spreads. Here we go. So the way that they make money on these brokerage houses is they don't charge you commissions. They don't charge you a commission, they charge a spread. So if you buy something and sell something, there's a spread of a couple of pips, depending on the time of day, depending on the market, which pair you're using. Then the spread could be as little as a pip. It could be 9 pips, and the buy and sell, it's the spread in between, and they take that right off the top. You don't have to calculate your fees and all of that into your trades. It's already there up front for you. It's right out in the open, and it's pretty cool. Now I use an app on my phone for Oanda, O-N-A, O-A-N-D-A, Oanda. I don't know if it's Oanda or O-N-A, but I use that on my phone, and I got a practice account with that. The beautiful thing with the practice account is you're you trading with fake money. They give you $500,000 of fake money, and you play them, and you play the market, you invest, and you go up and down, you learn from your mistakes, you learn how the market goes, how the trends go, how to watch things, and when you feel comfortable, then you can invest your money, you know. But you don't have to invest your money until you feel comfortable and you know what you're doing, and actually you can show the progress on your practice account as how you started out making mistakes, and you made these mistakes and those mistakes, and then you started figuring it out, and then you started making a little bit of money, breaking even, and then you really figured it out, and your system started working for you, and next thing you know, now you're ready to invest some real cash and play with, earn some real money, you know. So Oanda, I'm not endorsing Oanda, but that's what I use, and I find it to be easy to use on the phone, and like during my daily, to keep track. I just look at it. I'm in the store, I'm online, I'm, you know, wherever I am, and I can always check it out. And when I'm at home, I got it on the laptop as well, so I can always check it out. But it's, you know, there's plenty of different platforms, you know. TD Ameritrade has Thinkorswim is one of the most popular, and for all the markets, and it's got it on there for Forex as well, you know. But a little bit too rich for my blood. It's free, but it's a little, you know, I like things to be a little more basic so I can understand. There's so many things on there that I won't use, you know, because I'm not a professional trader. I'm just in it to do my day trading, and it's part of my multiple streams of income with my work from home hustle, where, you know, and more than one thing, you know, more than one stream of income has to be coming in. So I got a little money coming in from Forex every day, and I got a little money coming in from my various other businesses and endeavors and ventures that I go, you know, between apps and everything else that's making money for me on the side. So, you know, Forex is definitely one of those things where you can definitely earn some money and put it towards, and if you really wanted to just do Forex and you had the money to invest and have a lot of money, you know, but if you only, you know, if you only have a couple of thousand, couple of hundred to put in, you're only going to make, you know, a couple of hundred a day. So, you know, figure you're going to make about between 5 and 10% on what you have put to invest. And, you know, you're not going to do that in a bank or anywhere else, and you do that every day. You can do that a couple of times a day. You can roll your money over. You know, it's not like the stock market where you got to wait 3 days to get your money back. The money is available right away, and you just keep rolling it over. It's really, you could sit at your desk all day and make money all day long. So, you know, the Forex market is great. There's gurus on the line there on the internet that you can go to and pay money to and learn how. But, you know, like I said, the practice account and other videos, you know, just go out and get the information. It's out there free. Just keep going out there and finding it, and you get a piece from here and a piece from there, and you put everything together. Next thing you know what you're doing, and you got a practice account, which is amazing, because most of these things you do online, there's no practice. You're investing your money to lose, so if you make a mistake. So, but here you got a practice account that you can actually practice until you get it. That's just powerful to me, and I think that's just something that says, hey, I got to give it a try, because it's free and I can try it and figure it out. If it's free and I can try it and figure it out, if it works for me and it's free, then I got nothing to lose. And if it doesn't work for me and it's not for me, well, I didn't invest anything other than a couple of hours of time a day until I figured it out and I didn't like it. But so by all means, try it. Okay, I think it'll work for you. It works for me.